Bitcoin's price is constantly changing as it reflects investor and user sentiment, regulatory uncertainty, and media hype. But what is keeping the price stuck at or near $30,000? In a recent quick-take market update, on-chain analytics firm CryptoQuant listed 3 key factors that are holding the Bitcoin price down. 1. Lack of liquidity. As investors rethink their investment plans in the wake of the COVID-19 pandemic and fears about future inflation, high-level crypto withdrawals are driving down market prices. This is combined with the threat of further regulation and the failure of other digital entities/exchanges, e.g. Celsius Network, Binance. The result is a crypto liquidity crisis that could see Bitcoin slump below $19,800 or even $69,000 in the short term. Fortunately, the current crisis is unlikely to last long if the crypto market can find some stability. Liquidity is the amount of cash and convertible assets that a company has to fund its liabilities and meet its debt obligations. A liquidity crisis can occur when these resources are drained or come to a standstill due to unforeseen economic shocks or cyclical business changes. Liquidity issues can also be caused by maturity mismatching between assets and liabilities or improperly timed cash flow. When a business faces a liquidity crisis, it can't fulfill its debts because it no longer has the funds to do so. This can have a domino effect, as other lenders may refuse to provide financing or credit lines to the business. In the worst cases, a liquidity crisis can lead to bankruptcy. Bitcoin's price is currently stuck at around $20,000, as the market struggles to recover from the crypto winter. This is partly because of the fear of future inflation, but also because many people are selling their Bitcoin to pay for everyday expenses. However, history shows that Bitcoin prices tend to rise over the long term. For this reason, the Bitcoin price is likely to rebound once the panic subsides and investors have some confidence in the market again. That said, a volatile cryptocurrency investment is not for everyone, and it's always best to invest money you can afford to lose. Nonetheless, it's worth noting that a prolonged Bitcoin slump would most likely impact global financial markets and could have significant negative implications for the economy. As such, it's important that CFOs and treasurers take a structured approach to liquidity management. This could include adopting a more flexible liquidity policy and implementing a new, risk-based cash forecasting process to prepare for any potential disruptions. 2. Negative sentiment. One reason why the Bitcoin price is stuck could be that it's facing a wall of bad sentiment. This negative sentiment may stem from rumors or unfavorable news articles about crypto, as well as concerns that the digital currency will become useless if it becomes too popular. This sentiment is also compounded by the general market lull and a recent rise in interest rates, which has made investors more cautious about buying riskier assets. In addition, there are a number of studies that suggest that negative social media comments and chatter about cryptocurrency can lead to an increase in volatility. Earlier this year, Corbett et al., 24, found that an increase in the percentage of negative social media chatter following the announcement of certain macroeconomic indicators, such as unemployment or durable goods, was associated with a decrease in Bitcoin returns. Furthermore, Mai et al., 25, showed that the number of positive and negative comments on Reddit relating to a specific cryptocurrency, example Bitcoin, can predict its return. Another problem is that some analysts believe that the Bitcoin price has been artificially inflated. This is because it has resisted the flood of bad news that would normally push it lower, such as investigations into alleged fraud. When Griffin and his colleague Amin Shams, a Macom's doctoral student who has helped him screen for misdeeds, investigated Tether in 2017, they discovered that the stablecoin, which is supposed to be backed by dollars, had been pumped up using sales of USDT, rather than by the company's actual bank balance. Griffin suspects that a similar dynamic is occurring today. He speculates that a group of manipulators has agreed to buy together whenever the price dips to a level they set as a floor. For example, if the price starts to slide towards $16,000, they might all enter en masse, pushing the price back above that mark. This behavior would make it difficult for regulators to crack down on the scheme, because the participants' identities are shielded by their pseudonyms. Hence, the manipulation is likely to continue indefinitely. 3. Regulatory uncertainty. The Bitcoin price rose to new highs a month ago, but it has struggled to maintain its gains. This has been due to a variety of factors, including uncertainty around the Federal Reserve's upcoming interest rate decision. Many investors believe that the Fed will raise rates this week, which could hurt the cryptocurrency's value. Some people are also concerned about potential regulatory changes in the future, which could affect the cryptocurrency's market share. This is a concern that is based on misinformation and a lack of understanding about the way that regulations work. The truth is that most studies of the effects of specific regulations on different sectors of the economy have found that they do not have significant negative employment effects. However, many conservatives have embraced the false narrative that regulation is a major cause of our unemployment problem. This narrative is based on the false assumption that business owners are afraid of future regulations, which will lead to higher costs and reduced profits, which will then reduce investment and hiring. This is not true, as a simple examination of the actual employment trends and what business owners and their economists identify as their most important challenges demonstrates. Moreover, uncertainty over the future direction of regulatory policy is often exaggerated. In some cases, this is done intentionally by industry groups that are opposed to any type of regulation. In other cases, it is simply the result of a general lack of knowledge about how the legislative process works. It is possible that some changes in regulatory policy will actually improve the crypto market, but it is hard to know what those changes will be until they are implemented. It is worth noting that even when changes do occur, it usually takes time for them to have an impact on the overall market. 4. Lack of adoption. The Bitcoin price has been stuck for weeks and is likely to continue to be so as long as adoption is stagnant. This is because it is a pillar of the cryptocurrency's value proposition. The financial crisis that started in Europe and spread to the US has led many people to turn to Bitcoin as a safe haven. This has weighed on the crypto market as a whole, with collapses of industry giants like stablecoin project terraUSD and exchange FTX weighing heavily on investors' minds. In addition, popular culture perpetuates the idea of adoption as a purely benevolent act. From the ease of relinquishment in Juno to the courageous and selfless birth parents on MTV's Teen Mom, there is a deep cultural understanding of adoption as something that benefits only the child.